Today, we're diving into one of the most buzzed about stocks in tech, Meta Platforms. This social media giant is not only pushing the boundaries with AI and the metaverse, but could also be primed for its very first stock split. If you're intrigued by what Meta's recent record highs means for its future and what a stock split could mean for investors, stay tuned. Meta Platforms, headquartered in Menlo Park, California, owns the most iconic social media brands we use daily: Facebook, Instagram, WhatsApp, and Messenger. Recently, the company has been deep diving into augmented reality and AI, with major investments like Reality Labs and plans for the metaverse. Despite stock market highs this year, Meta's journey isn't just about hype. It's about keeping and expanding its dominant market position. Now here's where things get interesting. The S&P 500, Nasdaq, and Dow have hit multiple record highs this year, driven by the twin engines of AI excitement and a wave of stock splits. A stock split is simply a way for companies to adjust share prices and make stocks more accessible to retail investors. And we've seen many big AI players like Nvidia, Broadcom, and Supermicro make these moves. But what about Meta? With its stock price touching $600 recently, it's one of the few big AI players not to have split its shares. If Meta were to announce a forward split, it could be a game changer, making shares more affordable for everyday investors and generating serious buzz. Let's talk about Meta's financial stability. Meta's growth is impressive. Revenue hit $39.07 billion in Q2 of 2024, marking a 22.54% year-over-year increase, driven by massive ad revenue from its 3.27 billion daily active users. To top it off, net income surged to $13.47 billion in the same quarter, underscoring Meta's unmatched profitability in social media. Meta's ad pricing power comes from having the world's most active daily user base, something no other platform can match. This strength was helped when it bounced back from its economic downturns more quickly than most ad-driven businesses. And with 98% of its net sales stemming from advertising, it's clear that Meta's cash cow is here to stay. Their net profit margin is a healthy 34.34% for the trailing 12 months. Their operating cash flow, $19.37 billion in Q2 of 2024. Their cash and equivalents, a jaw-dropping $58.1 billion on hand, plus a free cash flow of $23.4 billion for the first half of 2024. This liquidity enables Meta to take aggressive, calculated risks and drive continuous innovation. With all this cash, Meta has ample resources to pursue groundbreaking projects from AI to the metaverse without compromising its core business. Meta currently boasts a casual market cap of $1.426 trillion and a price-to-earnings ratio of 29.32. A sign that investors are confident in the company's future. While this PE ratio is higher than average, it could also indicate investor optimism for sustained growth. But there's more. Despite the massive gains since the 2022 bear market low, Meta is still considered reasonably priced, with shares valued at 23 times the expected earnings per share for 2025. Let's zoom out to look at a broader AI space. Stocks like Nvidia, Amazon, Alphabet, and Broadcom have all undertaken stock splits recently. And when we take a cue from historical performance, a study by Bank of America Global Research found that companies that split shares tend to outperform the S&P 500 by more than double in the 12 months following the split announcement. Given Meta's major investments in AI, spending over $10 billion on Nvidia GPUs for its data centers, it's no wonder that investors are eyeing it as the next possible candidate for a stock split. Meta's Q3 earnings report is set to be released. This could be a defining moment for the company, especially with Wall Street anticipating a potential split announcement. With shares recently reaching new highs and the company's plans in AI accelerating, Meta could surprise investors. And for those of you holding or considering buying Meta, this announcement could shape the next chapter in its already impressive run. So, what's the verdict? Meta's fundamentals are rock solid, with stellar revenue growth, strong ad revenue, and massive cash flow. And while the stock split buzz is exciting, don't overlook the steady profitability and growth that make Meta a great long-term play. Technical signals are a bit mixed with high RSI and some short-term bearish indicators, but the overall long-term trend remains positive. In short, consider holding onto your shares. Keep a close eye on the upcoming earnings report and brace for what could be a very exciting Q4. Thanks for tuning in. If you enjoyed this analysis, don't forget to let us know in the comments if you think Meta will finally announce its first stock split, and I'll see you in the next video.